Ladies and gentlemen, good day and welcome to the RAILTEL Corporation of India Limited Q3 FY22 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from IDBI Capital. Thank you, and over to you, sir.
Yeah, good afternoon, everyone. Thanks for taking time out for the post-result Q3 earnings call of RAILTEL Corporation. From the management side, we have Shri Sanjay Kumar, Director Network Planning and Marketing, and Shri Anand Kumar Singh, Director Finance and CFO. As usual, we'll start the call with a brief overview from the company, and then we'll go in the Q&A session. Yes, sir, over to you.
Very good afternoon to all. Myself, Sanjay Kumar, Director Network Planning and Marketing from RAILTEL side. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q3 results for FY22, which was declared by the company on 14th Feb 2022. The company achieved consolidated total revenue of rupees 474 crores for Q3 as against rupees 381 crores in Q2 of FY21-22, registering the growth of 24% Q-on-Q basis. Year-on-year growth in total revenue for the third quarter of FY22 has been 13% as compared to corresponding period of last year. For 9-month period, the company registered the growth of 17% with total turnover of company at 1140.28 crores as compared to rupees 971.57 crores in the corresponding period last year. RAILTEL posted profit before tax amounting to rupees 88 crores and profit after tax of rupees 66 crores during the third quarter of financial year 21-22 on consolidated basis. Thus, for 9 months period, the company earned profit before tax of rupees 207 crores as compared to 156 crores in the corresponding period last year, registering an increase of 33% compared to last year. Earning per share has grown to rupees 4.82 per share as compared to rupees 3.5 per share during corresponding period last year and rupees 4.44 for the full financial year of 2021, sorry. EBITDA for the Q3 FY22 is rupees 126 crore and the EBITDA margin is 26.58%. Margin in the telecom sector is lower in Q3 FY22 due to accounting of SLA of rupees 32 crores in respect of NKN project, which was 10 years project. However, company's overall EBITDA margin is intact at over 28% for 9 months period. There is no pressure on company's healthy EBITDA margin for the remaining period of FY21-22. These results were achieved despite second wave of COVID in Q1 and Q2, the impact of which was felt in the Q3 also. For the shortage of semiconductor chips impacted the supply of equipment. I would like to share with you that company has bagged the prestigious ICAI Award for Excellence in Financial Reporting for the financial year 2021 under Public Sector Entity category. The award was received by the company at a function organized by ICAI on 9th Feb 22 at New Delhi. The award is a recognition of companies' financial reporting practices by the highest accounting body of the country, that is the Institute of Chartered Accountants of India. Right now, we have a very healthy order book of about 5,400 crore plus rupees, which will translate into revenue in coming quarters in phased manner. The company is constantly and consistently expanding its existing business and constantly exploring new areas and activities to widen its profile. The company has already entered into a new activity of installing a state-of-the-art integrated tunnel communication system and recently achieved an order of rupees 297.67 crore for installing such a system in Katra-Dharam Banihal section of the ongoing crucial Jammu and Kashmir rail link. The technology to be used in installing this system will be first for Indian Railways, and these projects are very crucial and essential for safety of train operation. The program of RailTel of providing free high-speed Wi-Fi facility at railway stations has now achieved a new landmark with more than 6,095 plus railway stations under its coverage. As a part of a new railway display network, that is RDN project, the company will install large format display screens at footover bridges, platforms, waiting rooms, and concourse at railway stations to provide the necessary information, social messages, and become a medium of enriched infotainment. We plan to float the tender by the end of this month. We have also refloated tender for content on demand, that is COD project, to provide preloaded multilingual content to passengers on their devices in mail, express, and suburban trains. The tender is expected to be finalized in few months. Both RDN and COD have high revenue potential. RailTel also recently implemented a web-based multi-module, feature-rich hospital management information system, HMIS, in all the 695 hospitals and health units of Indian Railways across the country, giving a unique, novel, and improved experience of health care to hospital administration and patients. All the 695 hospitals and health centers of Indian Railways across the country have been successfully integrated with Ayushman Bharat Digital Mission also. RailTel also intends to play a significant role in modernizing train control system through execution of Kavach, that is train collision avoidance system, and implementing LTE-based high-speed mobile communication corridor for Indian Railways. In the present Union Budget, the project of Kavach has been sanctioned for 2,000 kilometers. Our retail broadband service, that is RailWire, have reached 4.6 plus lakh subscribers, and we are targeting for 5 lakh subscribers and more than 280 crore rupees turnover by end of March 22. In order to expand the reach of its services, its RailWire services, MOUs are also being signed with state power transmission companies for utilizing their OFC network. We are going to create 102 edge data centers in different parts of the country jointly with private partners. We have floated EOI for selection of partner also. Scope of investment in this data center project is to the tune of 500 plus crore from partners. We are confident about continuing the momentum of profit and growth in future as well. We are committed to provide best services to our all stakeholders and will continue to expand, diversify, and upgrade our profile. The management humbly acknowledges the trust reposed by the investors in the company and would like to assure you all that in spite of the challenges still being faced by the country in general and the economy in particular, the company is and will continue to strive to achieve new benchmarks in the current financial year and the years to come. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nilesh Doshi from Prosperity. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. Sir, my question is related to the order books versus execution of the order. Just you have mentioned that the company has the order book around 5,400 crore rupees, and our execution level is in the first 3 quarters it is only 436 crore rupees. So within how many years company is likely to complete that much order book, or is company in a position to take any fresh order at this level? Hello.
Yeah, I'll answer to your question. Actually, this order book, there are orders ranging from maybe 2 quarters, even a year. Some projects are even 3-4 years, because there are some projects which are AMC, annual maintenance contract. There are some projects which are execution project where we need to deliver the project and then hand over it to the customer. So these order books are not spread over some fixed period. They are spread over different periods depending upon the nature of the project. Say for example, there is one project which is video surveillance system which is being installed, which will be installed at railway stations. So this will take around 2 years, and this project is roughly 700 CR. And then its OPEX part will continue even further, another 3-4 years, 5 years after the project is executed. So likewise, the project would have different type of, there would be different type of projects having different period of execution, and then post execution AMC period will also be there.
Sir, I understand that.
And one answer has to be made, that this is not the end of the getting orders, because we are continuously participating in tenders, getting orders from government, and like we are also having our own monetizing proposals, like I told in my content, this thing, that we are going for 102 edge data centers we are going to install, and EOI is already there. So this is our own monetization project. This is not awarded by anybody to us. So this type of activity will continue to be there.
Sir, nice. That order book is nice, that we have a very good order book which provide the stability and sustainability of the business. But once our execution level is for us, it is a 436 crore, and suppose we end the year by 1,000 crore rupees also, then also the order book, current order book can be executed by roughly the average run rate. It is the 5 years order book. And in technology business, can we receive the order which will be executed in the next 5 years? Is it possible, sir?
No, as I told you, there will be annual maintenance contracts also, which are of the long gestation period. So there will be projects which have longer gestation, longer period of execution. If you are to, like, we have one project, we have one order from defense, which has 5 years maintenance contract. So this will of course continue to 5 years, to be there for 5 years.
Okay. Sir, then what would be the average run rate yearly? It is 1,000 crore, 1,200 crore. What is the company is expecting to execute?
Last year we made a revenue of 1,350 crore, around approximately 1,356 or something like that. And this year we are targeting to be there around 1,700. So this growth will continue to be there. We are sure about it.
But does it mean that 5,400 crore rupees is including the telecom service also? It is only related to the project work?
No, it includes telecom services also.
So in for telecom business, can we expect the 250 crore rupees plus quarterly revenue run rate?
Telecom business segment will continue to be under pressure, not in absolute terms, but in percentage terms, because most of the revenue in the future will, of course, be coming from project side. And since we are in ICT category, there will always be telecom portion in most of the projects. So telecom projects, there will be telecom portion in projects, but the revenue per se will not be growing that much as it will go in the project side.
So suppose there will be a 2,000 crore rupees revenue. Can we expect the 1,000 crore rupees from the telecom as well as from the project in a years to come?
No, I think telecom revenue will be, maybe if you say 2,000 crore, then telecom revenue can be say 800, 900 crores.
Okay. And sir, why there is so much volatility in the telecom margin? Because in the opening remarks, I think you have mentioned that something 32 crore rupees is provided for SLA. That we don't understand.
I'll come on that. This was a 10-year project which started in 2010, January 1, 2010 it started. So over this 10 years period, this project concluded last year, 31st December 2019, and then it was extended again, so it became 11 years project. So this year we have consolidated this SLA reconciliation was a huge activity because there was more than 1,000 links. So reconciliation took some time. That is why this SLA has come as a single impact kind of on the thing, but this is not going to make impact this is very rare, I would say.
Okay, so is it particularly?
Our Director of Finance will also throw light on this.
Please.
So the NKN project SLA which we have adjusted, it was a 10-year project of around 850 CR. This initial years of implementation, the SLA, it was 1,000 plus. I stand corrected. It was a 1,000 plus contract, 1,000 plus crore. So the SLA of initial periods were now adjusted once that contract was completed and a fresh agreement was executed. So if we just take that portion out, we have a profit of 23% in the telecom business also, which in the second quarter was around 26%.
Yes, sir.
So the percentage of profit margin is being maintained. And I would like to add here one more thing. In this current quarter of Q3, we have accounted for electricity on an actual basis. What we were doing in the last 2 quarters was we were taking it on a provisional basis and adjusting it going forward. But in the third quarter, we decided to take up billing on actual basis. So there is no provision, actual basis. So electricity cost of 7 crore has been impacted in this quarter.
Okay.
That has also has impacted the EBITDA to some extent. But going forward, now the electricity charges will be on actual basis, which will not be at this height. It will be around 10 crore per quarter.
Okay. Sir, suppose we...
Regarding telecom revenue, I am very sure that telecom revenue margins will not be impacted. In fact, we have very healthy telecom margins, and thereby we are compensating lower project margins in our projects.
Suppose we exclude the 32 crore rupees from the current quarter's EBITDA and we add back. So does it mean that the EBITDA margin was maintained around 23-24%? Is it right, my understanding?
The telecom margin.
Yeah, telecom margin.
Yes, it will continue. We have a guidance of 25-26%, and we achieved 26% in Q2. If we take this out, we are achieving 23% in Q3.
Okay, sir. Sir, on last question, on ECL provision. Sir, last year we provided the certain ECL, which the 3 years older debt, we have provided made a provision, and now we are revert back. So does it mean we are receiving the money, or it's a management perception or management guidance that no more ECL provision is required, or actual money is received for the outstanding debtors, from the outstanding debtors?
Mr. Joshi, it's both ways. We are receiving money, we are realizing, and further, we have done a provision on a very conservative basis in the previous financial year. Now the management, we need to report the ECL also, but in a manner which is rational. So we are rationalizing. We have rationalized the calculation of ECL also, and this is resulting in the write back. But yes, recovery is also on. We are recovering.
Okay, sir. And sir, why there is also huge other income in this quarter, sir? What is the component of the other income?
Yes, it is because of that SLA which we just talked about, 32 crore. That 32 crore was in the debtors. It has come out of the debtors and it has come out from the turnover part, and it has gone to other income because it is a little write back of the ECL on it. This 32 crore was provided as ECL full 100%. Now, since this SLA reconciliation has been done, it has been taken to the other income.
So from next quarter onward, there will be no margin shrinkage in telecom business, and there is no more other income like the 32 crore rupees. Am I right?
Yes, you are right. 32 crore is not there. It will not come in the other quarter, but yes, for the fourth quarter, since the 32 crore has impacted in Q3, there will be a slight impact on the telecom margin overall in the year-on-year basis. But going forward from FY23, things will normalize again.
Okay, sir. Okay, thank you, sir. Thank you, sir.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Good afternoon, sir. Thanks for taking the question. So you, from my side, just a clarification on the other income. I really did not understand what you meant. There was a 32 crore impact on the cost side, and we have taken proportionate 32 crore benefit on the other income side. Was that you wanted to hint us?
I'll explain this. Mr. Jain, I'll explain this to you. 32 crore was as receivable in the books, and it was more than 3 years old, so it was provided. ECL, 100% ECL was accounted on this. Now in the Q3, this order was reconciled, and 32 crore came out as the SLA. So with SLA, the revenue portion of the telecom business revenue of Q3 was reduced by 32 crore, and the debtors also reduced by 32 crore. With the reduction in the debtors, the ECL provision reduced by 32 crore, which has been taken in the other income.
So net from the cash flow perspective, there is no impact.
No, there is no impact.
So basically, we have taken a 32 crores lower revenue, and we have taken a 32 crore higher other income. On a EBIT basis, there is no impact on the margin from this, right?
No.
And okay. My second question is on the cost inflation. There is a significant cost inflation in the employee cost this quarter on quarter. It has jumped up by more than probably 2x, right? And then there is a cost inflation in the license fee and spectrum usage charges, and then there is a significant inflation in the access charges. And these revenues are predominantly linked to the telecom services, where the revenue growth is only 10%, while the growth in these cost line items are between 15 to 26%. Can you explain why these costs which are linked to the revenue have such a high inflation?
No, I had just said previously there is an electricity cost which has increased. We were providing for electricity cost on a provisional basis. I'll take my time to explain this to you. We used to consider the electricity charges of the last financial year, and on the current financial year on 4 quarters we used to provide it on provision basis. Okay. Now provision in Q1 and in Q2 the actual bill of Q1 used to come. We used to account for that bill, reversal of provision or addition and further provision. So this used to give a reduction in provision or increase in provision as the case may be. So in September second quarter we accounted for electricity only 3 crores because there was substantial reduction in the provision. We said that this spike doesn't meet the proper guidance, so let us account for the electricity on actuals. So upon actuals, the electricity charges for Q3 has come to 12 CR. So you see that there is an impact of electricity charges on the as expense. Okay.
Why did it come in employee cost or a license fee or access charges?
I'm talking about the electricity charges. Employee cost we have paid hard and soft furnishing in Q3 around 1 crore was paid for hard and soft furnishing. This is a one-time expenditure. 1 crore was paid as ex gratia for the deputationist employees in Q3. This is also a one-time expenditure. And there has been the service tax on the HLA part has been expensed off. So that is also a one-time expenditure. So there is
No, we used to have a 30 crore kind of a run rate. Suddenly it has come at 50 odd crore. So we are talking about 20 crore difference quarter on quarter basis.
Q2 to Q3 you are saying?
Yes, Q2 to Q3.
Well, there is an increase of totaling 15 crore in Q3 in the total expenses, electricity charges, maintenance expenses have gone up. Yes, another point to be stressed here is we had done a major capex 3 years back. That warranty period is over. We have to now enter into AMC. So that AMC cost is now also factored in.
No, why will it come in employee cost? We are talking about employee cost here, right?
Employee cost, as I said, is basically only 4 crore increase in employee cost.
Let me come back on that number. And why there is a license fee spectrum usage charges grown by 16% while the telecom revenue is up only 9%?
Telecom revenue is concerned, it is based on the actual telecom revenue, but whatever the executive there is 32 crore, that will not affect.
See, the write back which has taken place, for that you are seeing a revenue reduction, but the license fee to DOT is paid on the actual revenue. So that has been paid, but since the top line, that is the revenue from telecom business, has been reduced by 32 crore, you are finding this sort of so-called anomaly type.
Got it. Got the point. Second thing on the project execution side, now that you said that there was a issue with the chipset availability and that has hampered the execution of some of the projects, is it fair to assume that Q4 will see a significant execution and there will be a significant acceleration in the project revenue?
See, regarding semiconductor chips availability and then related supply, the situation is still not significantly improved, but we are expecting post this third wave that things will improve. So certainly we'll come out of this, but this will take some time. So to some extent, yes, Q4 is also expected to get impacted. But we expect that another 6 to 9 months this should be over.
Got it. Few follow up on the initial remark, Sanjay sir, you made. First on the RDN and the second on the content on delivery. On the railway display network and both put together, when should they start contributing for us in terms of revenue, and what could be the potential for that?
So if you talk of COD, this is a 10 years venture, and we, on an average minimum, we expect roughly 600 CR over 10 years period in COD, more than 600. And if you talk of RDN, there we are expecting somewhere around 1,000 plus CR over 10 years.
Will be over 10 years.
Over 10 years.
And when will this start accruing? Any time we are talking about?
Sorry?
When should they start reflecting in our P&L from FY23, first quarter FY23, or it will come more in the second half of 23?
Yes. 23. COD 23, and then RDN maybe Q1 of 23, and RDN maybe Q2, or depends the participation in the response. So we are expecting to quickly finalize RDN also. RDN is likely to be floated soon. COD is under finalization. So Q1 of 23, we expect COD revenues to come.
Got it. And on the tower rollout and the 4G, which railway was planning for the high-speed data network, that when is that project expected to start?
tenders for modernizing train control. Those have started basically coming in. And LTE, this which you are talking about, 4G and LTE, that is yet to get frozen. So we are expecting that will come soon. But at least the modernizing of signaling, that has been sanctioned for 2,000 kilometers. So we are expected to get PI for RailTel in this.
So that signaling work will be involve us also. What kind of role are we planning to play in the signaling part of it?
See, signaling, basically RailTel is mostly, we have qualified signal engineers. Most of us are IRSSE, Railway Services of Signal Engineers. So we already have expertise, and we being from railways, we no other than us can be better system integrator for doing these works.
So we will be providing more of services in this case, in the signaling
We will
part.
be executing project mode. Basically, it will be kind of project mode only. We'll be integrating with, coordinating, liaising with railways, understanding technology, and then tie up with the OEM. There's a kind of similarly in the same manner as ICT project.
Fair enough, sir. Fair enough. Just one small suggestion. Since the IPO, we have seen too many accounting changes. No, we flip-flop a lot. As in this time electricity, earlier ECL, and then SLA. It will be very, very helpful if we have a very consistent and a conservative accounting system that will help us understand results better. Because of this volatility, I think comparing on a quarter-on-quarter basis has become really difficult. That's a small request. If you can help us in making this, that will be very helpful.
Sanjay, you have made a very valid point, but we are still 1 week away from the first anniversary of getting listed.
No, I completely understand, sir.
So we are in a process of streamlining everything so that going forward we have a very clean, clear, and a consistent reporting for the benefit of the shareholders and the stakeholders.
Fair enough, sir. Completely appreciate that point, and that's for the future.
But in the changes in the guidelines, with the changes in the India, as and when it is, we have to apply it.
Sure, sir. Well taken. Thank you.
Thank you.
Thank you. The next question is from the line of Datta R, an individual investor. Please go ahead.
Hello. Yes, am I audible?
Yes.
Sir, I just wanted to know this content on demand. This project, you said the revenue will be around 600. Have you taken into consideration this 400 new trains which are to be started which were announced in this budget? The revenue for the addition for considering this addition of 400 additional trains.
400 additional trains you are talking about?
Yeah, new trains. The finance minister announced that new railway network there will be addition.
No, we have not taken into consideration those new trains, but once those trains are started, then certainly we'll take them also into the scope of this. But right now we have not.
Because those are long route trains.
I understand, because once they are operating, then only we can, railways, actually it is railways who decide that these trains will be given to you. So afterwards, once this project is commissioned, then of course they will be given to us, but right now we have not taken into our consideration.
Sir, one more thing, this content on demand project you have removed from your website quite silently. Is there any particular reason it doesn't appear anymore on your website?
Sorry, your question is not clear. Just once again, please.
Sir, this new projects, there is a window of new projects on your website. this content on demand was there conspicuously since IPO.
Mm-hmm.
But since last 2 months, it has been removed from the website. Why is it so?
No. Content on demand, this was already awarded to a company, but then there was some failure on the account of the company. So we have terminated their contract and forfeited their bank guarantee also. And now we are again coming with. So this was in operation for a year and a half.
Yes, since last 2 months, it doesn't appear anymore there on the website.
Because that project was not there. Now once it is live, it will again be figuring on the website.
You said about 10 years. You said about 10 years project. You mean to say it will not continue after 10 years, or the tenure of the tender contract will be 10 years?
Tenure of the contract will be 10 years, and it has provision for extension or extension to the same partner, or it can again be floated if the partner does not agree to our terms and conditions after 10 years. So there is provision for, and the project will continue to be there with RailTel.
Sir, because of your vast network of OHC cable all over the country, are there any feelers or any interest being evinced by the private parties to take advantage of your network?
No, private parties, they are taking bandwidth from us. They are taking long lease lines, huge capacity bandwidth from us. So that is the advantage they are taking. Are you talking of some other advantage?
Sir, I am not a...
Mr. Datta, but may we request you to please rejoin the queue. We have participants waiting for the turn.
I just have one small question.
Yeah.
Can I continue, sir?
Yeah, speak, please.
Sir, considering the government thrust on this digital expansion of digital services, do you foresee the more interest from the private parties for your network offer?
As far as our business is concerned, private parties are taking services from us from this network. If you're talking of something else, as a company, we are not aware of any other knowledge.
No, I am asking your opinion as an expert in this field. Because of non-availability, private parties cannot install such infrastructure on their own. It is only...
What I feel, railway operation being related to safety and security of the passengers, so the right of way along the railway track, I don't think will be given to any private party, because it has the danger of basically putting the safety of the passengers into risk.
Thank you. The next question is from the line of Dhvani Shah from Investec. Please go ahead.
Hello.
Yes, please.
Yeah, hi. Thank you for giving me this opportunity. Just wanted two things. One was the breakup of the telecom services by NLD, ISP, and ISP, if you can provide.
And you want it for the quarter, third quarter?
Yeah.
I'll provide you the figure for 9 months, okay? Of FY22. NLD is 330 CR.
Okay.
ISP is 261 CR.
Yeah.
And IP1 is 149 CR.
Okay. Thank you. Also, can you provide us with the content on demand contribution for last year and this year?
Content on demand contract got terminated this year, in this financial year. We had received around, in the first year, commitment of minimum guarantee of 63 crore was received by us.
Okay.
In this year, the contract has been terminated. I mean, a part of this financial year, a part of the revenue, when I say about 63 CR, that part of that was spilled over to the current financial year. And now we have refloated the tender. So coming in FY23, first quarter onwards, we hope to start earning revenue from that COD.
Okay. Thank you.
Thank you. Before we take the next question, reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Nilesh Doshi from Prosperity Capital Management. Please go ahead.
Thank you, sir, for providing one more time an opportunity to ask the question. Sir, what is the size of the AMC business in the total order book?
AMC size of the total order book would be around to the tune of around 1,500 to 2,000 crores. We have not worked out in exact terms, but it would be somewhere in that range.
So that AMC is for because the word AMC, it means annual maintenance. Then 1,500 crore rupees order book has to be executed within a 1 year?
No, I told you, these are 4 to 5 years, 6 years, even few of the projects are 8 years.
Okay, sir. So 1,500 crore rupees is the AMC order book, which will be executed over a period of time. Is it right, sir?
Yes.
Okay, sir. Sir,
1,400 crore order book is not stagnant. We are continuously adding to it.
Yes, sir. That's right.
We are continuously getting orders, which you might be seeing on CB stock exchange notices also.
And sir, generally AMC business carries the higher margin. Is it right for our business also?
Certainly better than project, but not as good as telecom.
Okay, sir. Sir, just you mentioned that the COD revenue potential is around 600 crore rupees for the 10 years. Does it mean the COD provider is giving? Hello? Sorry. Sir, just you have mentioned that COD revenue potential is around 600 crore rupees for the 10 years. Does the COD provider provides any minimum guarantee that you will, irrespective of the volume or usage, the company will provide the around 60 crore rupees plus to the RailTel?
So that's what I told you. This is the minimum guarantee which we are expecting. The bidder is expected to quote more than this. This is minimum. That will be again minimum guarantee, and then over and above that, based on the actual utilization, there will be revenue share also.
Okay.
So I'll just add to what Sanjay sir just said. I'll just give you the correct. 63 crore is the minimum guarantee that has to be quoted for each year, minimum guarantee. So over a period of 10 years, the total minimum guarantee is 630 CR. Beyond 63 crore, there is a table made for sharing of revenue that increases from say 20% to up to 45% of the revenue generated. So when we are talking about the minimum revenue that will come from this project. The maximum sky is the limit.
So the content will be provided by the bidders, and network and other facilities will be provided by the RailTel. And so any capex or opex will be incurred by the RailTel. Only the content will be provided by the bidders. Am I right?
No. All the capex will be done by the bidder who is coming on board. We'll be providing the connectivity only. Entire capex is to be done by the bidder.
Okay, sir. And sir, last question. Earlier, I think we had a agreement with the G subsidiary of the G network, and that agreement is terminated. Has they raised any objection against because it is terminated by the RailTel? Have they raised any objection, or is there the matter is any pending litigation is any pending, or it is now that is permanently over and we can float the new tender from the new bidders?
Now, as far as our information goes, they are looking into some legal recourse, because there's been a termination, so obviously the other party has the right to look for legal recourse as per the contract conditions.
But that will not affect our new tender, because they had earlier approached Honorable High Court of Delhi for against the termination of this contract, which was quashed by the Honorable High Court of Delhi. So there is no doubt about this new tender. This is nowhere in doubt.
Okay. So when the tender will be allotted to any eligible party within can we expect in Q4
we are expecting to be finalized in the Q1.
Q1.
2023.
Okay, sir. Sir, thank you very much, sir, and best of luck to companies and everybody, sir.
Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, I think you just briefly touched that, the orders that we are receiving, we have mentioned in exchanges. So, will it be possible to share, is there any other order that we have received which is not part of it, or maybe total order info that is we have received in this quarter and 9 months?
We have included all the orders in the whatever figures I have shared, so there is nothing new. But yeah, there are orders in pipeline which might be received and will be, of course, displayed on the notice board of the stock exchange.
The information on orders received has been shared with the stock exchanges and have been considered in our order book.
Okay, fine, sir. Fine. We'll calculate from there, sir. And the second on ARPU, can you share what is the Q3 number for us in railway?
It's around 500 rupees only.
So it is largely same.
Largely. There is no significant change in the ARPU.
Okay. And so
you are interested in the figures? The railway revenue till Q3 is 217 CR. The railway subscribers are 4.34 as on 31st December. So you'll see the ARPU is around 500.
Okay, sure, sir. Sure. That's helpful. And next, sir, in telecom, in this is more like a generic question. So in voice side, we have seen a tariff increase by telecom players. So in the services that we provide, are we seeing any uptick in terms of ARPU or probably tariff revision on a higher side?
No, actually, you are right that telecom service providers, they have at least now come out of that rat race of reducing the tariffs. So as far as impact on RailTel is concerned, there will be slightly relaxation on our basically on southward pressure on our prices. But it will have only marginal impact. As far as data is concerned, I don't think there is any significant changes going to be there.
Okay. But is there any lead lag impact or in the sense like, since the telecom player in the voice, they have increased and then later on it happens in data? Or
most of the telecom service providers today have their own network. They're hardly dependent on others. And wherever they are dependent on us, where they have no connectivity at all, like remote and rural areas, so we never give them any leeway in those areas because they are completely dependent on us and there is supply and demand. So there will be no impact. Wherever they have taken capacities from us, they will continue to be at the same rate.
Okay. And I think you briefly touched upon this modern train control system. There was an announcement in the budget of Kavach also, which you mentioned. So this 2,000 odd kilometers, what is the size of this order in crores? Or probably project, I'll say.
This is actually only announced by the Parliament, but it is yet to be passed. But yes, you are right. So this will be around 24-25 lakhs rupees per kilometer. This is just an estimate. There's no confirmed figure. Once it is passed by the Parliament, then only we can comment on that.
Okay. And then again, in the sense when you mentioned this 24-25 lakhs, so this includes the technology and everything, or signaling part will be different where we have a forte? How exactly the structure will be?
This is complete track side equipment cost. In addition to that, there will be cab equipment also that I have not included because once the Parliament clears this proposal, then we'll know how many trains they are going to implement this and how many engines and caps they are going to implement. So then only sizing will be done.
Okay. And then, sir, earlier we have briefly mentioned, there is a pilot work which is going on for this modern train control system, and the technology part is yet to be decided. So is that thing frozen?
Yes, this is the same. This is the one.
Okay. So the technology part is frozen, and now we are moving in the implementation phase of it.
Yes.
Okay. And since this will is in terms of tender activity, I think in PSU earlier there was a norm within PSU the awarding has to happen, but now it is open, so any player, private, public, any player can come and participate in this opportunity.
Yes, that is true.
Okay. And last thing from my side, sir, this is again a generic. So since the country is moving in a 5G side, there will be a capex rollout. So what will be our role, and how can we benefit out of this opportunity?
See, 5G is very industry-specific technology. So post 5G, IoT-driven mechanisms will come into place, which is yet to be seen in India. So of course, RailTel will get benefited by getting IoT-based projects. As far as 5G is concerned, RailTel's investment won't be there.
Okay. Sure, sir. Sure. I think that's all from my side, and thanks for taking my question.
Thank you. Participants, to ask a question, you may press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Vishal Periwal for closing comments.
Yes, sir. So I'd like to thank the RailTel management for giving us this opportunity to host the call, and also thanks Shri Anil Kumar Saxena ji for advisor Media RailTel for this call, and I'll hand over the call over to Rituja now. Sir, any closing comment from your side?
Thank you very much to all our stakeholders to spare their time to attend this call. Thank you.
Thank you. On behalf of RailTel Corporation, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.